All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Glad to be with you this morning, Friday, October 27th, 2023, here on the Gar Capital YouTube channel. This is your first time here. Make sure to like our videos if you like the videos. Comment any of your questions and hit that subscribe button. We would love to have you as a viewer, of course, and turn on notifications so you don't miss any videos. We will do a video this weekend recapping the week. So far, so good in terms of that. Pretty much an undefeated week after a very mixed week last week. So we'll go over that. We'll go over the market. Depending on how we close today, very, very important things are to be shown to us as traders. So it's going to be a very interesting weekend video and a lot to talk about. So I hope you join us for that video to at least watch it. It will not be live. It'll be recorded. But again, just wanted to give you that heads up. So turn on notifications so you don't miss it. Let's go ahead and get to the market. The Dow is up 15 points this morning. NASDAQ up 0.89%. Thank you very much. Amazon, S&P 500 futures, 41.75, up 0.46%. Small caps Russell, 1667, up 0.18%. Banks had a good day yesterday. IWM had a decent day, better than the NASDAQ. The dollar index is flat, 106.59, with the VIX down 2.76% at 2011. Crude oil is up 84.55, 1.61%. Gasoline futures up 1.5% at $2.29. Gold futures keep projecting that 2000 level, now at 1990. 22.91 for silver, that's flat. $3.64 for copper futures this morning, that's up 1.58%. Seeing the commodities catch a bid. Let's take a look here. We'll go to Forex land. 105.60 on the euro dollar, that's flat. Dollar yen, we are short, 149.88. We are profitable at this moment. That's going to be a swing trade. We're playing the rejection of the recent highs, which was 150. We broke above that, but again, it could be a double top for my Forex guys who are watching from the server. Let's go over it. What's up? Good morning. Good morning. Let me just go over this dollar yen chart, and then we can go ahead and answer some questions too. All right, so here we are. Possible double top here on dollar yen. That's where you have your stop, right around 152 or so, 151.93. Again, you're gonna have to swing this. Let's see if we break below this moving average, was right around 149.50. Again, we're looking to target 148.15. That's your 50-day. But again, we need to see if we can finally break down below the 20. That probably would have been the best setup for a break. We just wanted to get a little earlier than that. 150 was that key intervention level for the BOJ. I've been repeating that. So that's the entry that we used. Right now we're up about 18 pips. So again, we want to get below 149.49. Once we start breaking down below that, we'll go ahead and possibly move our stop a little bit. But again, we want to catch this for a swing. In terms of TP2, I'm looking at the 100-day. That's 145.25. If we can catch that, that's a possibility of 475 pips. But you got to be patient. Again, look how many days this was. So again, we're gonna swing it. Let's see what we get. I like this setup for risk reward. If we're wrong, we'll know rather quickly, which is kind of the preferred method to do it, right? Let's go ahead and take a look at the S&P 500. We'll take a look at NASDAQ as well this morning. Going to S&P, going back to the daily, look at this level. This is your support. That's the 50% retrace, very, very key level. So we did the Fibonacci retracements. We were above that 50% fib really since the breakout of May. This is where the breakout is. So we go ahead and do the round trip, we retest it. Now we need to see if we hold. Now the 200-day is very, very important. We broke below that, which is not good. We need to get above 4,200 today. It's a very simple equation. If we don't close above 4,200 today on S&P, there's a problem. We could definitely go a lot lower very quickly. What are some of the targets then, if that's the case? 39.41 is the 200-week moving average. That's it. That's what you're looking for, and that's where we bounced last time. So we'd have a lot of air pocket here. But if we break down there, forget all-time highs this year, that's for sure. I mean, sure, we'd be green for the year, but we'd be testing the lows of March. So not the best, not the ideal situation. I don't think we get there, but again, we have to see how we close. Again, anything changes, so we want to have at least the preparation of anything deviating from the possible trading plan. But for those who like news and good news, here it is. For the average year since 1950, today is when stocks typically bottom? October 27th. This is all of the years 1950 to 2023. October 27th is when stocks usually bottom. Interesting. S&P 500 may drop another 5% from current levels. This is Bank of America strategist Michael Hartnett. Says the same thing. The 200-week moving average, I agree, being support. I don't think we get there. But just 7 days ago, he said that the market has become so bearish that it's triggered a contrarian buy signal in a custom Bank of America corporation indicator setting up the asset class for a short-term rally, according to Michael Hartnett. So nothing like price to change sentiment, as we know. But again, he is analyst. This is what he does. So again, let's not beat up Michael too much. I get it wrong too. Bank of America gets it wrong. So does Gar Capital. Nothing new. But at the end of the day, I still think that we hit a bottom. I got into a long at 41.60 on ES. We got to 41.90. I did not. We closed the stop at break even. Moved the stop to break even at 41.80, and then it tagged it. So again, got stopped out. I'm looking to see if we get above 4,200, possibly 41.80, maybe 41.85, so we can go long. Target 42.64. If we really start cooking today, maybe we do get a little bit of a short squeeze / relief rally. What do you see in terms of this market here that would show that? We're going to go to RSI, and again, oversold conditions. So again, remember last time we had this oversold conditions was 10.4. That was October 4th, excuse me, 42.58 all the way to 44.36. 200 points from here, just like last time, would be 43.76, right near the zone of support, which is probably resistance, and you get to right here, back to another inflection point, if we bounce. But again, oversold RSI, pretty much the most depressed sentiment since last year. Everyone thinks the world is over, and then all it takes is one glimmer of hope, one good headline, and possibly it happens. Negotiation progressing rapidly to achieve ceasefire agreement. Exchange deal between Hamas and Israel. Al Jazeera sources. Could that be enough? Could peace be enough to get us over the hump? We will see. Core PCE did meet expectations on a month-over-month basis, 0.3%, but the PCE price index 0.4% over 0.3%. Personal spending outpaced 0.7% versus the 0.5% estimate, with personal income missing slightly, 0.3% versus 0.4%. So remember, the core PCE is the preferred inflation model or inflation number for the Federal Reserve. So again, we're getting a bounce up 0.5%. Nice to see, obviously. The question is, are we really due for a bounce, or is this a dead cat bounce? Well, I think it's the former, not the latter. We just need to get above 4,200. We need to close above it. Very, very important that we close above it. Let's go and take a look at Amazon, and then we're going to answer some questions as well. Amazon, here's the green line here around 119.57, the 200-day moving average being around 117. I sent this over to Masterclass yesterday. I said, excuse me, I said, if anyone is looking for a high-risk setup, Lottos, right? I know it's earnings, but Amazon, I like long here. I like the 125 calls for next week expiry. A little juice due to IV, but we can always wait until tomorrow. 117 is a 200 DMA. I think we hold above that. We are now trading at 126.95. You could see it here. We were a little higher earlier. So again, a complete lotto. I feel it for next week personally. I don't know with Masterclass. I know one person traded it for this week. Savage. So congratulations if you catch it. It was a risky trade in the face of, possible meltdown on Amazon. Bought some time. I wish I signaled that because, now it looks good. But again, the risk was just very, very high. So we got to wait and see how we open. And we'll go from there. So we'll see if maybe we get above, 41.90 or so. If we get above 41.90, which is the highs of yesterday, then or yesterday afternoon, we'll take a look at a possible bite of an ES long, see if we can get that continuation and get this snapback rally. Good morning. Let's see. Are we in correction territory? We are. We are now at a 10% correction on S&P, right around 9.9. We closed at 10% correction. Correct. Good morning, Carlos. Any thoughts on NVIDIA? I bought 425 calls for next week. Ooh, we did hit that 3 handle on NVIDIA. So we are now at 410. We had 398 yesterday. 425s. Let's see it. You gotta hope that you hold this support here. So again, I expect a rally today. There is a slight gap to fill at 449 if you hold it. I don't think there's any earnings exposure except for AMD. So if AMD craps the bed, NVIDIA is going to be affected. So that's the only risk you have there. I would say hold it. You might get to 436 by the end of the day, which would retest the October 24 highs, and you're good. We'll see. Let's take a look at Alibaba. One of the options I hate trading, to be honest. Baba's got a lot of gaps, as we know. This is an ADR, which is a Chinese stock from overseas. Let's see here. Baba, you need to get above right here, above 83.94, and you have a gap to fill here at 94. I would say above 90, you could play the 94s. Until then, I would not touch it until you get above 97 at least. I would say actually above 106.84. That's breaking above the April highs. 103.50 is the double top highs that we had from July and April. So I say 103.50 would be the target. If you can get out of, if you can see if we break that, then you have a gap to fill at 116. That's a pretty good snack for a swing. But the question remains, does it bounce? We just have to wait and see. Pretty depressed sentiment from China, as we know. They do have some stimulus working out there. But all those headlines, you know, you're very beholden to those, which is very difficult because when it comes to the Chinese government, they're not exactly the most transparent when it comes to finances. So, you know, trade at your own risk there. And on Alibaba, I think there's better opportunities out there. But, you know, play some alerts, see where we go. Levels to watch on NQ. Let's see it. All right, we're going to go to the daily. Look at that, 200-day right there, 14,000. We need to get above 14,367. So let's go ahead and place an alert there. If we break above that, by that point, I would assume S&P 500 is at 4,200 or so. And then we're trying to see if we can get a little more of a juice up to around that 14.5, which we kind of hung around for a minute until we actually dropped. So again, 14,372 for more upside. That's about 50 points from where we are. If you break below 136, you're taking a look at 14,000 being the next target. There's anything else. Can we take a look at the Google chart? Yeah, let's do it. Google's been absolutely smoked since their earnings. Now you got a lot of gaps. So let's go to trade. Let's go to charts, excuse me. Here we go. And did we fill that gap yet? We did. We filled that gap. We do have one more here at 118.11. We also have the 200-day. So at least you filled this gap here. The question is, do we bounce? So far it is. You got a couple of gaps to fill here. So my thing is, I'd rather see Google kind of digest this earnings move, get above 130, that's above your 100-day, and then you can play the gap fill as high as 135. I wouldn't want to trade it within this zone here because this gap fill looms here. So you got a small gap to fill here at 126.06. That could fill. That's not a terrible setup, but again, it's a little too close to trade. So again, this looms here as risk 118.21 to around 117.29. But if you get above 130, I like upside for that gap fill as well. Remember, SPY has a gap fill to the upside. Apple has a gap fill to the upside. Tons of gaps that need to be filled. And there's also another one here at 113.75. We're still in an uptrend. It's not like, you know, Google's absolutely been obliterated. You know, it's not at around 100 or anything. That would be May levels. So similar to the S&P, you got that breakout in May, but it has not retested the breakout on Google. So again, there is risk to the downside. It's a big move, as we know. I think want to say 14% in about a couple days. Oversold, I assume. We'll go ahead and throw the RSI chart there to give us a little bit of the information that we need to see if it's oversold. Excuse me. Yeah, 31 RSI. You're probably oversold here. Again, I expect a bounce today anyways. Just got to get above 4,200 on S&P. Got to close there. So I'm going to not touch Google right now. We'll revisit next week. Still expecting all-time highs. Oh, good question. And that's something I'm going to answer over the weekend. Depends on how we close. That's what I'm going to say. Right now, you could say, yes, I do think, in the face of death, I still think that we're going to go higher. And I still think we're going to hit all-time highs this year. I still think so. The expectation, if you guys want some numbers, I'll give it to you. I had this meeting yesterday with Nick DiGiacomo, who's one of our VPs, and I told him the expectation is a jump of 19%. 19% off the lows is what I expect. 19% off the lows on S&P at 4450 gets you to around 4900. And again, I'm going to go into more detail on that number on the weekend video, the 19% kind of target. And again, it's really based on seasonality. I mean, it's kind of the script that we've been following now for about all year. I'll go ahead and go over it on the weekend video again, since we'll have a little more time. But let me go ahead and see that. You know, it's tough to see because there's a lot of fear out there. You know, tough to see. But you could see up 10% in June. If you're up 10% in June, again, since 1950, you can see that the S&P does go higher. It does. It does go higher towards the tail end, and you can see up about 24.94% towards the tail end for the year. That's about a gain of about 14% if you go by where you were. So we'll go into details on that, but yes, Christopher, I'm still expecting all-time highs. Now, if we melt down today and we absolutely get obliterated, then yeah, then that's pretty much over. That pipe dream is over, if you call it that. But the close today will be key. Let's see if the market makes me look dumb. It has before. I'm sure it will again. So we'll see what happens. That's all I could say. What do you think about Bitcoin? Bitcoin, let me take a look at the futures side. 34,475. I prefer a sustained hold above 35,000. Especially with seasonality, the VIX being weaker. I know VIX doesn't have nothing to do with Bitcoin, but again, risk on, risk off, always. So again, if we get a little more risk on, people want to buy stocks again, you know, bottom is in, Bitcoin has more to go. It doesn't move in tandem with the NASDAQ, but the NASDAQ does help at the end of the day. It's not a one-for-one correlation. Bitcoin does have, to me, has more room to go. The question is timing. So again, if we get above 36,000, I might just go ahead and do the futures trade on Bitcoin and see if we can snatch that for some points, if we can ride that momentum, if the bottom is in, which I think it is, as long as 41.55 holds. But we'll see what happens. Long-term stocks to buy, I'm going to go and talk about that this weekend because we're going to probably run out of time. So again, we're going to do a whole playbook depending on how we close today. So it's going to be very, very important. This weekend, we're going to go over the playbook. We're going to go over the forecast. We're going to update the forecast, what we're looking for, and what to do if certain things happen. And that's really all we're going to do on this weekend. So it's going to be a great video. I can't wait to do it. And it's going to give you a lot of information. So make sure to turn on notifications, guys. We'll go over the mega caps. We'll go over the banks. We'll go over the small caps. We'll see. Again, we know that when it comes to fear, it usually masks opportunity. So what are we looking for? We're looking for opportunity. Up or down. Again, if it's a meltdown, okay, fine, guys, we're gonna have to short. Can't fight it forever. But if this is the bottom and everyone's afraid, usually what happens? It's hard to be a bull right now. I'll tell you that right now. And remember, we talked about this on YouTube for months. Go and take a look at all the videos that we had. October, we were expecting that slam. We were expecting that pullback. Now, was it this much that we expected? No. If not, I would have shorted already a long time ago. But we've been doing puts and calls. We've been navigating the market, even with all this noise, very, very efficiently. And I'm very proud of the work that the whole team has done. And we're going to keep that going. In this market, for us to do that well, I'm very proud. Imagine when things are moving higher with some momentum. Then we're really cooking. And that's the deal. All right, guys, we'll go and leave it there. Have a great rest of your morning. I will see you guys on the weekend for the video. Have a great week. Have a great Friday. We'll see you guys this weekend. Have a good one. Cheers.